and St. John. Each island is special in its own unique way, and all have plenty to offer as you decide where to travel this winter. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Whether it's a romantic getaway or a family vacation, the U.S. Virgin Islands has everything you need to enjoy the vacation of a lifetime. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
We are the Debt Destroyer Network. Any debt you have, credit card, tax, student loan debt, call now for free information that helps you destroy your debt. It's great advice. Plus, when you make this free call now, we have Debt Destroyer experts ready to help. They can show you how to destroy your debt and get your life back on track. Debt problems don't have to be overwhelming. You can live stress-free and debt-free. Credit cards, medical bills, IRS tax problems, even student loan debt. Learn about free programs offered by the credit card companies, hospitals, and even the government that can help slash your debt. Call the Debt Destroyer now for free information. Call now. 800-430-8804. 800-430-8804. 800-430-8804. Again, that's 800-430-8804.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and our guide this month is titled 9 Tips to Spring Clean Your Finances. Mike, when we look at getting things squared away to start a year, one really important place is just making sure that your accounts have the right beneficiaries on them to begin with.
Yeah, I've seen this ignored. It's rare that it comes into play, but certainly if you pass away or if your spouse passes away, it's going to make life a lot easier if you've thought about where the accounts go after the fact. I cannot tell you how many times I have seen people leave an ex-spouse, for instance, on as a beneficiary without really thinking about it, or the number of times where people have made changes to their estate plan but not change their beneficiaries.
And a piece that goes along with that you mentioned there is making sure that your estate plan is also updated as well for life events or changes in your family situation that may have occurred.
Absolutely. I mean, not everything is going to have a beneficiary on it, but there's additional confusion there too, right? I change my will or I change my trust, and I don't tell the investment company that manages my 401k or my investment account. Those two things do not talk to each other, and in many cases, the beneficiary will supersede the will, the trust, these things that you think you've taken care of by visiting the attorney and checking all the boxes, but not necessarily depending on how you do it.
Our guide is titled 9 Tips to Spring Clean Your Finances, and there are 2 ways to request it. The first is by calling 800-393-4001. The second is by visiting ArmstrongAdvisory.com. That phone number again is 800-393-4001, or you can request the guide at ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. The DAV 5K Boston is presented by Veterans Development Corporation. This is the Financial Exchange with Chuck Zodda and Marc Fandetti.
Hope everyone had a fantastic weekend. It's Chuck, Mark, and Tucker with you on... It's actually a busy week of data that we're going to be getting coming out this week. New home sales data drops at 10 a.m. this morning. Actually, I guess just dropped at 10 a.m. Tomorrow, we get durable goods orders. We get the Case-Shiller Home Price Index. We get the FHFA Housing Price Index. Wednesday, we get the second estimate of Q4 GDP, so the first revision of it. Thursday, we get PCE and personal income data. Friday, we get ISM manufacturing and consumer sentiment, and we're right into the February data at that point, since Friday is March 1st. It's the beauty of a normally 28-day, now 29-day month, because happy leap year, everyone. And that's what we've got on tap this week. But we'll kick things off with a discussion about PCE, just because that's going to be the most important data point that we see this week. Mark, on a scale from 1 to excited, how excited are you to see what we get from PCE on Thursday?
A little apprehensive, I guess, as those of us who follow inflation data. Though, let me caveat this with, take it with a grain of salt. It's 1 month. You say this a lot, and I think it's great advice. If you're not an economist plugging this into one of your models, whereby a big unexpected burst could really change your forecast, don't sweat it too much. I guess the consensus is for, say, somewhere in 0.4-ish core month over month, 0.3 to 0.4. I'm guessing.
Yeah,
because
0.4.
that's what models that economists traditionally use point to. I'm resigned, and I have been for a long time, for what it is worth, that this is not a disinflationary economy, that the disinflation, the fall in the rate of inflation that we've experienced over the past year and a half has been mostly due to supply shocks, favorable supply shocks, resolution of supply chain. Those two things are not the same thing. They just sound alike. Snarl-ups that plagued us during COVID. Supply chains normalized. Energy prices went up and went down. And then, of course, the Fed did raise rates by 5.25 percentage points. That has to have affected demand, perhaps through the housing channel. Those effects have probably worked their way through the economy. So further disinflation. And this raises a question, well, disinflation from what level? What is inflation at today? Over the past 12 months, well, December to December, CPI inflation, headline, was up about 3%. Is that the true underlying rate of inflation in the economy? I don't know. Measures that trim outliers and allow us to focus on the trend in inflation by filtering out the noise point to a higher rate of inflation. So in a fundamental sense and in sort of a structural sense, underlying inflation is high. The economy's still running pretty hot. A higher than expected, getting back to the data that will be reported this week, a higher than expected month-over-month PCE, so something in the 3 to 4%, or maybe even a little higher, annualized range would not surprise me. That would be totally consistent with an economy that's firing on more than all cylinders.
When we look at this, and I know that oftentimes when you read different financial headlines and stories, it's kind of binary. It's either, hey, the economy's too hot, or we're in recession. That's like what gets presented most often. It's very rare that you see a story that says, hey, things are okay, they're not perfect, but they're moving along fine, and here's what we need to fix. I think that one thing that's interesting to me is, let's say that this economy is running too hot still. Is there a case to be made that there is a way to manage that without the overly destructive, gloom and doom recession that we're used to.
Yeah. So one symptom of too hot just means the growth rate of overall demand, total demand, aggregate demand, if you want to get fancy, is in excess of growth rate of total supply. That's one reasonably uncontroversial definition of too hot. So you could squelch demand by, say, raising taxes, or as they tried in the early 70s, price controls. None of this is on the table right now.
No.
But you just ask sort of theoretically, what's in the toolkit? Well, you can suppress demand by taking money out of the economy. You could do that by raising taxes. You could do that by capping prices. They tried that in the 70s.
What about cutting spending? The same thing as raising taxes,
anything
basically?
I guess depending on where you cut it. Yeah. Some of us would prefer that to tax hikes, but tax hikes are probably the more direct way of taking spending out of the economy, some might argue, because, it depends on where you cut government spending.
Sure.
And you could also impose credit controls. Carter tried this in the very late 1970s. It was disastrous because people, good patriotic citizens, complied and were sending him cut-up credit cards. Mr. President, I'm helping in the fight against inflation.
What did he do with them?
That destroyed.
Did he try to use them?
That poor guy.
Can you tape one
so
together
beset
and
by
use
bad
it?
luck? Yeah, that's a good question. I don't think we were thinking about that in those days. So it seems comical now. It's tragically comical because it precipitated and exacerbated a recession. So those are some of the tools in the toolkit. But most, I think, economists would say money in the long run is a function of inflation. In the long run is a function of too much money at the risk of oversimplifying it. So ultimately, the job is the Fed's to curtail inflation and to get it back to a low and stable sort of background noise, nobody pays attention to it level. Whether Fed funds rate is restrictive enough to get us to that point, given the underlying characteristics of the economy that we talked about, is an open question, I think.
When we look at what we are seeing right now, one of the other things that I saw over the weekend, and I'm curious to get your thoughts on it, because it's quite honestly beyond my level of understanding, and
probably mine too.
No, you're often very good at getting things that are beyond my level of understanding.
It's only age.
Which part?
Seeing something you may not have seen.
Maybe. No, this is getting a little bit into the weeds on some economics data.
I'll let you ask the question.
One of the things that we are seeing in the last year and a half now is a meaningful increase in the velocity of money, or the rate at which it's turning over and changing hands. When we look at that in the context of the growth versus inflation debate, any thoughts as to how that may weigh in, or is it just way too theoretical to
velocity,
get anywhere?
So a monetarist economist, and a lot of you listening, you've heard of monetarism because it was very popular in the 70s. Its most popular proponent and popularizer was Milton Friedman.
Right.
He'd go on Donahue. He wrote for Newsweek. He was very prominent, and he was a monetarist. A monetarist would say, and I'm sympathetic, so I want to be balanced here. A monetarist would say inflation, as he put it, is always and everywhere a monetary phenomenon. That's probably one of the most famous phrases in economics. Also not true, because in the short run, some prices are sticky. Others, like oil, go up a lot. If oil goes up a lot and everything else is sticky and doesn't move, you get average prices going up a lot. So, and Friedman knew this, of course. Actually, in that paper, in an article not long after it, he said, except for when in the short run, some prices don't move, and other. He didn't quite put it like that. That's an anachronism. That thought came later. But anyway, so he knew that inflation wasn't always and everywhere monetary, but in the long run, it is, and most economists agree with that. So, what's the problem in the short run? It's the volatility in velocity, in velocity, in the turnover, in the demand for money is one way to put it. If people demand more money or less, that can affect inflation. That can affect demand in the short term, which creates jumps in inflation that aren't related to the supply of money. If velocity were steady, if the demand for money, which I'm using as a sloppy proxy for velocity in this conversation, if that were steady, then inflation in the short run would be predictable using the money stock. But those of us who are sympathetic to monetarists, and I bet a lot of you, monetarists, I bet a lot of you out there know that in the short run, the M's, M1, M2, the monetary base, they don't line up well with inflation if you lag them and try to use it as a predictor. In the long run, though, they do very well.
Let's take a quick break here. When we come back, we'll talk a little bit about what we are seeing in Treasury markets right after this.
The Financial Exchange streams live on YouTube. Like our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network. Your next incredible vacation is just a click away. The United States Virgin Islands is the perfect place to enjoy sun, sand, great food, unbelievable beaches, a wide variety of water sports, and the relaxation you deserve. So go to usvi.com. Learn all about St. Croix, St. Thomas, and St. John. Each island is special in its own unique way, and all have plenty to offer as you decide where to travel this winter. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Whether it's a romantic getaway or a family vacation, the U.S. Virgin Islands has everything you need to enjoy the vacation of a lifetime. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
To be engaged, you must feel included and valued. The DAV Department of Massachusetts nurtures a culture where inclusiveness is a reflex, not an initiative, where there's a deep sense of pride, passion, and belonging that is unified in our shared commitment, dedication, and patriotism for our country. We know through experience that different ideas, perspectives, and backgrounds create a stronger and more creative organization that delivers better results for the veterans and families we strive to assist. For more information, visit davma.org.
Protecting your assets is the key to a sound estate plan. Cushing & Dolan's new guide is called Back to the Basics, a complete guide to an estate and asset protection plan. In it, you'll learn about important issues like avoiding probate and potentially eliminating your estate taxes. Call 866-848-5699 right now and request your free guide today, or request it online by visiting legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Planning for your financial future never stops, and with spring on the way, right now is the perfect time to take stock of your overall strategy. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and our new guide may help. It's called 9 Tips to Spring Clean Your Finances. If you're planning a significant purchase either this year or down the road, we've got important information to share that will help you understand the effect it may have on your finances. You may be retired or getting close to retirement, and if so, this guide is for you. Take the necessary time now to review your financial strategy and learn about what adjustments you can make that might benefit your planning. The guide is free and it's yours today by calling 800-393-4001. That number again is 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Estate and asset protection are the keys to a successful retirement. Cushing & Dolan are experts in elder law, and if you're ready to start your planning or need a refresher done on your existing plan, you need to get their new guide called Back to the Basics, a complete guide to an estate and asset protection plan. In it, you'll learn strategies to help you protect your assets from probate, as well as the nursing home. We'll also show you how to properly create your will and set up your beneficiaries in a way that will ensure your family's security for the long term. Call Cushing & Dolan right now at 866-848-5699 and get your free guide today. Proper estate planning is not easy. There are many necessary elements that you'll need to include to give you the peace of mind you want as you prepare for your later years. That number again is 866-848-5699. 866-848-5699. Or you can request the guide online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. Breaking business news as it happens, only here on the Financial Exchange Radio Network.
Mark, have you ever been in a car?
I think so, Chuck.
I want to talk a little bit about shock absorbers. And the reason why is that there's a piece today in the Wall Street Journal It's titled Treasury Markets Are Losing Their Shock Absorber. And I've ridden in a car as well. And what makes me nervous when I do is when the suspension is a little off, when the shock absorbers aren't working as well as they should be. And so naturally...
What are you driving, a Buick Roadmaster?
No,
Do people have that problem anymore?
What was the giant Oldsmobile that they had back in the 80s that was 21 feet long? It was the largest production sedan ever.
Was it one of the Cutlasses?
I'm sure it was.
The Delta 80, maybe a Delta 88.
No, it wasn't that. I can't remember. The thing was legitimately like 260
olds.
inches long or something like that. It was
No,
ridiculous.
they had a Tornado. They had the Delta 88.
Tucker will dig it
maybe-
up. But I read this headline, Treasury markets are losing their shock absorber. And immediately I go, how are we going to keep the Treasury markets, functioning?
From bouncing around, yeah.
And here's what this piece is actually talking about. So there is, within the Treasury Department, or rather within the Federal Reserve, there is a program called the Reverse Repurchase Facility. And it sounds complex, but it's actually very straightforward. Basically, what you do if you are a bank or money market fund or whoever you are who has a bunch of extra cash floating around, you say, look, I'm going to park this cash on your balance sheet and at the Fed, and I'm going to leave it there, and in turn, you are going to give me some interest for loaning you these cash securities. It's pretty much what it is. And in short, it's probably a measure of, depending on how you want to phrase it, either excess cash floating around the financial system or a lack of collateral floating around the financial system. The reason I use the word lack of collateral is that in a perfect world, if you're a bank that's got $500 million in cash and you've got no one to lend it to, all you do is you say, okay, I'm going to go out and buy a 3-month treasury or a 1-week treasury or whatever it might be, and now I've got a treasury on my book instead of all this excess cash. It's basically an accounting feature more than anything else. But at its peak, a couple of years ago, the reverse repurchase program at the Fed had about $2.5 trillion in balances, the highest level on record, and now it's at about $500 billion. So the question that is out there that people are asking is, gee, what happens when, the reverse repurchase program gets, empty? Does that mean that we're going to have, all kinds of financial stress? And
is that what they sound like?
What?
Like Goliath from the Davy and Goliath?
Yes.
Oh, gee, Chuck.
Yes. Oh, well, how are we going to deal with this?
That's a big fall.
The
Fed's
reverse
balance sheet,
repurchase
Chuck.
program, is it?
They're all geniuses, by the way, and we're...
Well, look,
they are,
well,
and we're
okay.
making them sound like morons.
Well, no, so instead we could go, well, the reverse repurchase
That's more
program
like
is
it.
going to
That's
be
more-
winding down
Well,
soon.
now you sound like Mark Twain.
How do we know what
Little
Mark Twain
squeaky.
sounds like?
Oh, I'm just.
Do
That's
we have
how
recordings
I
of
pick.
him?
No, I don't think we do.
What,
He's
Tucker, when
on
was the-
YouTube. He's got a podcast
That
out.
would have been very late.
When was the first ever recording of a voice?
Like 1880s.
Not even, radio broadcast.
Like
but
a
when,
public, yeah.
when was the first recorded?
April 9th, 1860.
Really?
Some French dude.
Oh, okay. I stand corrected. I'm thinking.
What-
I was
what
thinking Edison.
What was the
I
name
don't
of the
know.
French dude?
Oh, no, it was a song. Never mind. I'll keep digging through it. You keep asking me random questions. Oldsmobile 98, by the way, was your first
Oh, I said
weird
Delta 88.
question.
I was
Maybe that
was off by 10.
You're off by 10. It was fine. So this
10 feet,
this reverse
apparently.
repurchase program, it's not something that anyone necessarily knows here in terms of how this is going to specifically affect broader markets. Whether you're talking about the Treasury market, whether you're talking about equity markets and things like that. These are questions that the Fed and the Treasury have to work out, because the key thing that you have to remember about both the Fed and the Treasury is, before we even talk about inflation targeting and before we even talk about trying to maintain an economy at full employment, first and foremost, the Fed and the Treasury, they're plumbers. They need to keep the plumbing of the financial system working so that credit can actually be issued, not just to you and I, but you talk about 2008 just as an example. And the reason why it was financial Armageddon was because banks were unwilling to lend to each other, not even to us. So I think ultimately this is something that the Fed and the Treasury Department look at closely and say, hey, how are we going to manage this to make sure we have ample liquidity so that lending can take place? And they'll figure it out. There will be, hiccups here and there. I'm not saying that there won't be, but ultimately this is what they do all day, every day, is plumbing.
I don't think I understand this well enough to get worried about it. I look at the usage of this, and these are just short-term loans, really.
Sure.
From, say, money market funds to the government. the repo, the repurchase consists of getting a treasury one day, having it bought back by the government the next with a little bit of interest, at Fed funds rate interest. That's what made this very attractive a couple of years ago. So it's a liability of the Fed. It's part of their balance sheet. The Fed's trying to shrink their balance sheet. So in a sense, the shrinkage in the usage of this facility, that's a little awkward, but you know what I mean, is a good thing. It's shrinking the outstanding liabilities of the Federal Reserve. The question is, as money market funds and other lenders, because again, as I understand it, you're giving money to the government, they give you a treasury, then they buy it back the next day.
Yep.
Thus repo.
Yep.
The cropping up of better opportunities has caused them to either keep their cash and invest it or park it elsewhere. I don't really know.
Well, so what I think it is, and it kind of meshes with this, it's two things. Yes, better opportunities, but also the Fed is winding down its long-term purchase arrangements of its balance sheet as well, which at one point were north of like $8.7 trillion.
That's where I get confused.
Now down to like $1 trillion or so.
Why does that affect Treasury bill repos? Sorry.
So if you look at two things, the first is, what is the Treasury Department actually issuing? One of the big things that Janet Yellen did in Q4 of last year said, hey, I'm going to issue more bills as a percentage of debt. So if you have longer-term debt coming due, Treasury says, hey, we're going to issue more bills, and the Fed says we're not buying as many, then money that would have gone into reverse
for this facility
repo.
because the demand has
Exactly.
waned.
There's additional collateral floating around
So
out
another
there.
buyer could step. That's where I sort of came down on this, because, again, I don't know enough to know whether this is a potential problem, but could there not be more buyers that step into the void?
It could be. It might not be. The big thing that
lenders.
The big thing,
like
before
buyers,
2013,
you know what I mean.
Before 2013, this facility was basically not used. It really didn't get any kind of meaningful use, and so in that context, there's nothing inherently bad about this reverse repo facility going to zero. It's just
because it was zero for a long time. Like
yeah,
you said.
the world has just changed in the last 10 years, so you don't know if it necessarily means anything or not. So that's kind of where I end up landing on this. It could be something that matters. It might not be. It depends on a whole bunch of different factors that you can't predict right now. What I will say is, given the current rate of decline of the Fed's reverse repo program, more than likely you're going to see that getting towards zero sometime around the middle of this year. That's the timeline. And again, if needed, the Fed and the Treasury will modify how they do things in order to ensure that there's adequate liquidity in capital markets for companies to go out and conduct business. Why? Because at their core, the Fed is one thing and one thing only. They're bankers. It's right in the name. The central bank. It's right there. They exist to serve capital. And as such, they're not going to just say, oh, well, gee, there's a problem. We're not. No, it's not what they do. Let's take a quick break. When we come back, it's Wall Street Watch.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
Hi, this is Susan Powers from the Armstrong Advisory Group. With spring on the way and taxes due soon, now's the perfect time to review your overall financial plan, and our monthly guide may help. It's called 9 Tips to Spring Clean Your Finances, where we outline numerous issues that may affect you going forward, like evaluating any income changes for the upcoming year. It's important to understand how a difference in income might affect your long-term planning. Even if you're comfortable with your current plan, taking stock of potential adjustments may help further secure your assets in the future. Learn about this and other important strategies in our new guide called 9 Tips to Spring Clean Your Finances. Get your copy today by calling 800-393-4001. That's 800-393-4001, or request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Services. Your next incredible vacation is just a click away. The United States Virgin Islands is the perfect place to enjoy sun, sand, great food, unbelievable beaches, a wide variety of water sports, and the relaxation you deserve. So go to usvi.com. Learn all about St. Croix, St. Thomas, and St. John. Each island is special in its own unique way, and all have plenty to offer as you decide where to travel this winter. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Whether it's a romantic getaway or a family vacation, the U.S. Virgin Islands has everything you need to enjoy the vacation of a lifetime. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about the basics of estate planning. Todd, what happens if you don't have a healthcare proxy in place and your spouse needs nursing home care?
So this is a basic document that we don't talk about as much as we should. It allows you to appoint somebody else to make a medical decision for you. And by the way, it's not just one medical decision. It could be any number of things, from prescription drugs to doing a surgery. And yes, the most important one, which is, hey, if all hope is lost, I don't want to, be on a machine. But that's the basics, and you do need it for that. But the bigger point is, if you enter a nursing home and you don't have one of these, you're not going to be able to admit them. You're going to have to go get a guardianship in order to admit them to the nursing home, because they're not going to allow you to do that. So very important that you have one for that. Now, guardianships are time-consuming and expensive. You got to hire a lawyer. You got to go through a lot of nonsense, right? If you have this basic document, which you should have for anyway, just for your basic purposes, having it not only for those reasons, but to help you get into a nursing home if you need to, is essential.
Learn how you can avoid probate, eliminate estate taxes, keep your money in your family, and protect your assets from the nursing home. Request the brand new guide from Cushing & Dolan. It's called Back to the Basics. 866-848-5699, or you can request it from their website, legalexchangeshow.com. Cushing & Dolan have been helping families like yours for more than 30 years. Call 866-848-5699, or request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch, a complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Well, markets are mostly quiet, edging higher to begin the week as investors await a key inflation reading on Thursday morning in the core PCE index, which is the Fed's preferred measure of inflation. Right now, the Dow is up by 67 points, S&P 500 is up by 1 point, and the Nasdaq up by 35 points. Russell 2000 is up by about 0.5%. 10-year Treasury yield is up by 2 basis points at 4.28%, and crude oil up over 0.5%, trading just below $77 a barrel. Shares in Domino's Pizza up by 6.5% after the pizza chain upped its quarterly dividend by 25%, which will be payable on March 9th. In addition, the company increased its buyback program by an additional $1 billion and also posted a better-than-expected profit for the fourth quarter. Meanwhile, Walmart carried out a 3-for-1 stock split where shareholders will receive an extra 2 shares for every common stock they own beginning today. That stock up by about 0.2%. Elsewhere, Gap was upgraded by J.P. Morgan to neutral, where the financial firm praised the retailer's widening assortment of products and cost-saving efforts. That stock up by 1.5%. Alcoa has agreed to purchase Australia's Alumina for $2.2 billion, sending Alcoa shares down by 3%. And after today's closing bell, we'll see fourth quarter results from Workday and Zoom Video. Tomorrow morning ahead of the open, Lowe's and AutoZone are among those companies who will be reporting their earnings. I'm Tucker Silva, and that's Wall Street Watch.
Mark, over the weekend, Berkshire Hathaway reported their earnings, but along with that, in keeping with tradition, it's time for Warren Buffett to release his annual letter, basically recapping what happened in the last year. And last year was a notable one for Berkshire Hathaway, as Charlie Munger, the Berkshire vice chairman, who passed away on November 28th, was mentioned pretty completely, pretty fully by Buffett in this annual letter, and I'll just read a quote here. Charlie never sought to take credit for his role as creator, but instead let me take the bows and receive the accolades. In a way, his relationship with me was part older brother, part loving father. Even when he knew he was right, he gave me the reins, and when I blundered, he never reminded me of my mistake. And it does speak to the fact that, look, when Buffett started out his investment career, I mean, he's often thought of, he still is a disciple of Benjamin Graham. And he was very much of the idea, and these are his words, not mine, he was trying to buy fair businesses at wonderful prices. And Munger convinced him to do the opposite, buy wonderful businesses at fair prices. And Buffett has said, look, that pretty much changed my entire thinking about how we should run this business, because instead of trying to buy dumpster fires that might be worth, okay, they're valued at 3 cents on the dollar and they're worth 6. Instead, no, let's buy something that's, valued at 80 cents on the dollar and it's worth a full dollar because there's an actual business there. And that really, I think, represents what Berkshire Hathaway has turned into. And so, despite Munger passing away at age 99, Buffett still there. I think it is something where clearly he's talked an awful lot about the succession plan that is in place for him, and I don't think he's necessarily as involved as he used to be. I mean, keep in mind that Buffett is going to be 94 this August, which is remarkable in and of itself. And the other thing that you come back to on this, and Buffett noted this in the annual letter as well, that he said, look, maybe the best that Berkshire can do at this point is a little bit better than what you see in indices, because it's not the same investing landscape as the one that I started in 60, 70 years ago as well. It's not the 1950s or 1960s where there are larger inefficiencies in markets to be able to exploit the way that he did so masterfully.
Probably not. There are many more participants, many more analysts, many more informed individuals. But there are time-tested sort of eternal principles, if you like, when investing. And one is don't overpay for something, whether you're a value investor in the Graham and Dodd tradition, as Buffett says he was, or more of a, I want growth, I just want to pay a reasonable price for it tradition. I'm oversimplifying a little, but that, to me, is one way of describing Munger's philosophy. I think those two approaches have a lot of overlap and have a very sensible proposition at their core. Just think about something may be a very good company, but the price you're paying for it matters. The higher the price, the lower the expected return, no matter how promising a company. NVIDIA is one example. I'm not commenting on its prospects. I'm really not qualified to do that. I'm saying only that as exciting as it is, there is a price at which it is not a good deal. The key question is, have we exceeded that price? Are we below it? Are we at it? That is the million or billion or $1 trillion for some people.
$2 trillion question.
That is the Thank you for saving me.
Another piece in the Wall Street Journal today. Investors flock back to biotech after a long, cold spell. So biotech, if I'm being 100% honest, is a part of the market that I don't understand. And I'm not afraid to admit that, because to actually understand biotech and what companies are doing in there, you need to have a different kind of degree than the one I possess. The people who are really good at understanding what's going on in biotech world are not history majors. They're not. And I think there are two ways that you can look at biotech in markets. The first is, hey, how can I become an expert in this so that I can tell which biotech companies are the ones that are promising and the ones that are not? Which you basically have to be someone who has worked.
You have to have a
one,
science background.
You do.
You do.
I think you have to have worked in biotech for quite a while.
You do.
Quite
It's
a while.
way too specialized.
The other way is that and this is the I won't say cheat code because it doesn't guarantee that you actually do anything with it. But the other way is, okay, if you just view biotech as a proxy for liquidity in markets and exuberance in markets, I think that you can use a shortcut there to say, hey, what's going on with this in that fashion.
Yes. Sorry. Yes, Chuck.
Yes.
Yes. I'm just a suck up today.
So that's the
Right
other way,
again, Chuck.
That's the other way that I think you can
No,
look
absolutely.
at it.
It's a good barometer. A lot of these high-flying, the more volatile sectors, I'll just say tech generally, they're good barometers for the influence of animal spirits, of irrational exuberance, whatever phrase you want to use to describe whether or not investors are getting ahead of themselves. Because it's mostly hope. These stocks do not pay dividends. Most of them aren't operating using proven. Many of them, I should say, maybe not those that make their way into the S&P, but those in the smaller stock indices and those that have yet to go public. Proof of concept is not there yet. You're buying a lottery ticket, which is why, for most of us, a very broadly diversified basket of these suckers, or better yet, owning them in conjunction with a lot of other sectors, is the best way to go. That way you don't have to pick the right lottery ticket, because I, like you, don't understand it. I don't have the background.
Speaking of lottery tickets, back in 2020 and 2021, we had it wasn't a flurry of EV SPACs and IPOs that went public. It was a full out blizzard of these SPACs of companies that were going to make electric vehicles. Some of them, still exist and still are publicly traded companies. The Rivians of the world, the Lucid of the world, they're still out there. Others, well, some of them were exposed as complete scams. Like, what was the one with Trevor Milton that they pushed the truck downhill? Nikola, that's the one. So some of them were exposed as complete scams.
They're still in business, though, I think, right?
Yes, but after,
he's in the
He went to
slammer.
jail, I
Yeah,
believe,
yeah,
and there
he's
were
in
some
the
significant fines. Others simply realized, hey, we can't actually make money doing this and we're not good at it. I believe Lordstown Motors falls into that category. And there are dozens of other ones that are out there as well that have yet to actually produce vehicles. But even the ones that are producing vehicles are finding, hey, maybe there's a reason why in the last 90 years, the only car startup that you could call a success in the United States is Tesla. And even there, it's still a short track record ultimately that we're looking at, but it is just a business that eats up capital and has low margins, requires you to always throw more cash in it, and it is just an absolutely horrible business to be in,
business,
quite honestly.
The airlines, railroads, it's hard to think of one that is not low margin and therefore
they're all commoditized.
With a little bit of volatility. Yeah, capital intensive and very business cycle sensitive, just very hard to make money, as you said.
But some of these EV manufacturers, Lucid, just as an example, they produce the Lucid Air, which I think sells for, I think the cheapest one's probably like 80 or 90 grand, and they go up to like 300,000. So
why not?
Why not buy 2 houses in Iowa instead of buying one of these? But what do I know? They're going to produce 9,000 vehicles this year. You can't make enough money on that to operate.
Is there a niche? Is there a niche for the Rolex of?
Sure, it's called
electric?
Ferrari, but there's one of them already. It already exists.
Okay, yeah, that's a good answer.
It's there.
Are they making electrics? Do they make an electric Ferrari?
Not yet, but I believe they will have their
right?
first one in the next couple of years,
Okay.
and I'm sure they'll have no problem selling it because it's a Ferrari. When you are trying to sell, the Lucid Air for $250,000 because it's the whatever edition, why would I buy that?
I don't know. I don't know how much scale you need to manufacture a car at that price point, or whatever the right terminology is, viably.
Well, Ferrari's whole thing, and why they're still around, is, hey, these are handmade vehicles. You know, we only make so many a year. There's only, 2,500 of these made a year, and that's what we do. This is, no, we want to build, like, EVs, and they're just really expensive. Well, okay. It's nice, but that's not a business. And there was a ton of money thrown at a bunch of companies just because they had the letters EV in their business plan. And first of all, making cars is not, an easy business. And second, hey, how do you know you're actually going to have demand for your vehicles? How do you know that people actually want to buy these? Just saying you want to make this many cars doesn't make it so. I want to have a great head of hair, Mark.
Don't we all?
But
can't all be Tucker Silva.
Some of us.
My God, look at that! He must have 700,000 hairs on his head.
It's great lettuce.
Decent flow.
It's great lettuce. It's it's exquisite. Others of us, we're the cue balls of the room, and that's fine. Someone's got to get in there and do our thing too. Let's take a quick break. When we come back, we'll talk a little bit more about the AT&T outage from last week.
Business and financial news affecting the markets and your wallet. We've got it all straight from Wall Street right here on the Financial Exchange Radio Network.
Planning for your financial future never stops, and with spring on the way, right now is the perfect time to take stock of your overall strategy. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and our new guide may help. It's called 9 Tips to Spring Clean Your Finances. If you're planning a significant purchase either this year or down the road, we've got important information to share that will help you understand the effect it may have on your finances. You may be retired or getting close to retirement, and if so, this guide is for you. Take the necessary time now to review your financial strategy and learn about what adjustments you can make that might benefit your planning. The guide is free, and it's yours today by calling 800-393-4001. That number again is 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Your next incredible vacation is just a click away. The United States Virgin Islands is the perfect place to enjoy sun, sand, great food, unbelievable beaches, a wide variety of water sports, and the relaxation you deserve. So go to usvi.com. Learn all about St. Croix, St. Thomas, and St. John. Each island is special in its own unique way, and all have plenty to offer as you decide where to travel this winter. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Whether it's a romantic getaway or a family vacation, the U.S. Virgin Islands has everything you need to enjoy the vacation of a lifetime. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com. If you've had a successful career and want to make sure you protect your assets, now's the perfect time to create a plan that will allow you to enjoy your retirement years. Cushing & Dolan's new guide is called Back to the Basics, a complete guide to an estate and asset protection plan. And in it, you'll get educated on important issues like how to avoid probate, passing your assets along to your family, and potentially eliminating your estate taxes. Don't wait. This free guide has all the information you need to build a safe and secure estate plan that will give you peace of mind as you close in on retirement. Call 866-848-5699 right now and request your free guide today. You can also request a no-obligation consultation to review any current planning you've done. Cushing & Dolan have been helping families like yours for 30 years. Let them help you too. Get their new guide called Back to the Basics today. Call 866-848-5699 or request the guide online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
The Financial Exchange Show podcast drops every day on Apple, Spotify, and iHeartRadio. Hit that subscribe button and leave us a 5-star review. You're listening to the Financial Exchange Radio Network.
But eligible accounts are now going to be getting a $5 credit posted to their account for individuals who were impacted. It does not apply to AT&T Business or accounts through prepaid services, but $5 for losing a day of wireless, Mark.
Small coffee.
I wonder what their lawyers, obviously they were advised to offer something. Does it have to be such chump change? That would irritate me. I'd be more inclined to sign on to a class action. I'm not suggesting that they inflicted injury on anybody that warrants damages, but that wouldn't placate me. I'd probably, maybe you would too, I'd probably get on the horn and say I need at least, I don't know, say 20.
Why?
I don't know. It strikes me as unfair. I have no basis for that. It just feels unfair.
It's just,
Chuck, it feels
just
unfair.
Send out $5.
So it's really just, if they're giving me $5 to go away,
there must
be more money that they think I would ask for.
So in a sense, they started it by making an offer.
It's kind of like the Streisand effect. You know, in trying...
Could you define that for me, please?
So Barbara Streisand famously had a house it was like a beachfront house that someone posted a picture of, and no one would have paid attention to it, but instead she sued the person, and now everyone paid attention to it and knew that she had this beachfront house and the picture of it. So the Streisand effect is when, in trying to suppress information, you make it more likely that people look for the information. This is kind of the monetary version of that. Hey, in trying to suppress a class action lawsuit, are you actually encouraging
Do you
one?
even have to sign a waiver? Probably not. They're just going to give people the credit. But it seems paltry to me, is almost inside. Now, I'm not a customer, so I don't know why I'm getting worked up.
So here's what I would have done. If I were the CEO of AT&T, which I thank the Lord each and every day I'm alive that I'm not. But here's what I would have done. I would have just said, hey, people in the billing department, go and back up the billing cycle by 1 day for every single customer. So that if your subscription was supposed to renew on the 17th of the month,
okay,
now it renews on the 8th. Hey, you lost a day? Great. We're just going to push you back a day and credit you a day. Fine. No money exchange, nothing, and just you get an extra day. Now, I know why they don't do that, because it's probably not as simple as just saying, hey, change the thing to 1 day later.
Yeah, record keeping.
You know, some months have 30 days, some have 31. This year, February has 29. Every 400 years, February does not have a 29th day in leap year unless it's occurring on a millennium. These are things you need to build into your billing system. I'm done.
I would have done a $5 scratch ticket to send those out to everybody. I'd be more excited about that.
This would have actually been a great opportunity. We're partnering with DraftKings to give you $3 in free bets.
They just bought a new lottery venture, right?
Oh, that would have been fantastic.
$5 does seem to be the standard customer service credit to placate people. Xfinity does that too. Yeah. When I lose power or service. Why is that?
We've partnered with Subway to give you a foot-long sub at participating locations.
I would
show your AT&T bill, and you'll get a free foot-long next time you go to Subway.
Your next incredible vacation is just a click away. The United States Virgin Islands is the perfect place to enjoy sun, sand, great food, unbelievable beaches, a wide variety of water sports, and the relaxation you deserve. So go to visit usvi.com. Learn all about St. Croix, St. Thomas, and St. John. Each island is special in its own unique way, and all have plenty to offer as you decide where to travel this winter. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Whether it's a romantic getaway or a family vacation, the U.S. Virgin Islands has everything you need to enjoy the vacation of a lifetime. America's Caribbean paradise is waiting for you, so head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
I'm just trying to think of other things that they could give you beyond, a $5 foot long.
I don't know, some earbuds or something.
If
Something
you're
they
flying on a
have-
participating JetBlue flight, just submit your bill and we'll credit you the cost of a pillow for the entire flight. Like something like that.
I think I'd prefer that to $5. $5 is almost insulting. It's barely,
I'll
where I get coffee, it's 5 coffees. But for a lot of people, it's barely a coffee.
Yeah, medium coffee is like, what, $3.70 something now?
Is it really?
Something like, I don't know. Maybe.
What's
I'm
it
a
say?
large guy, so I
Dunkin'?
don't know.
I wonder how fat the margins are on coffee these days.
Good. Pretty good.
They got to be pretty fat. I mean,
I get mine at McDonald's through the app, so it's like $1.
Let's think about this. It's how big is a medium coffee? Like 10 ounces, 12 ounces?
16.
So how much does a cup of water, like that's 2 cups of water? That costs what, like 1 cent? The coffee beans, the margin's got to be fat. They got to be fat. Let's take a quick break. Hour 2 of the Financial Exchange is next. Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we have a guide available this month titled 9 Tips to Spring Clean Your Finances. Mike, one of the things people need to look at starting out a year is whether or not they expect a major shift in their income, either higher or lower.
Yeah, a lot has changed in terms of how we work and just family dynamics over the last few years coming out of the pandemic. And you've seen a lot of people jump back into the labor force that might have gotten out, or the opposite of that. And certainly it comes and impacts everything from 401k contributions to how much you're going to be able to save and put out for the next year. And so just understanding where the income side of that budget is going to land for 2024 and doing that evaluation is an important step of the process.
The other piece to pay attention to is the expense side of things. In particular, if you have one-time expenses that are going to be coming up, if you need work done on the house, if you've got car expenses or anything else, make sure you plan for that as well.
Well, how are you going to finance it? Do I have an emergency fund? Am I going to borrow money for a home improvement that I'm doing? Maybe I'm already retired and I'm on a fixed monthly budget from Social Security and maybe a pension, and I've got some big expense coming up. You might need to realign your portfolio for that coming expense. And so really just, again, it comes mainly down to budgeting here, but thinking about where those income and expense numbers are going to land for the full year.
Our guide is titled 9 Tips to Spring Clean Your Finances, and you can request it 2 different ways. The first is by visiting ArmstrongAdvisory.com. The second is by calling 800-393-4001. That number again is 800-393-4001, or you can visit ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Are you retired like me and you just found out you owe the IRS a ton of money? Well, what would your life be like if they took your retirement savings away from you? They can do it and your property. If you owe the IRS back taxes or you haven't filed in a while, the tax relief line is here to help you. They can stop the IRS from taking your retirement savings. If you qualify, you could have your tax bill reduced to 0. That's right. If you're retired and you owe the IRS a lot in back taxes, you could have your entire tax bill reduced to 0 due. The IRS has now hired thousands of new employees, so they're ready to come after you. Don't let them take your retirement savings or property. Make this free call now.
800-251-2153. 800-251-2153. 800-251-2153. That's 800-251-2153.
This is the Money Matters Radio Network, WBNW 1120 AM and W275CM FM, Concord, Boston. The Money Matters Radio Network.
Do you use the expensive blue or yellow pills to charge your sex life? Are you thinking about it? What if we can promise you the same results for less than $3 a pill? If you're paying $20 a pill for the other pills, you're getting taken to the cleaners. Our pills deliver the exact same results for less than $3. You'll save more than $16 a pill for the same results. And right now, radio callers will get 44 blue or yellow pills for $120 with free discreet shipping. You can save more than $700 off pharmacy prices. Charge your sex life now and save a ton of money. Call now and get your 44 pills and save over $700 and qualify for free shipping. Stop overpaying and call right now.
Paid for by Steel Man Pills. 800-475-8547. 800-475-8547. 800-475-8547. That's 800-475-8547.
If you served in the Marine Corps, by now you know about the contaminated water problem at Camp Lejeune. If you were stationed or worked at Camp Lejeune from 1953 to 1987, you probably have a lot of questions. We have some answers. You could be entitled to compensation. Billions of dollars are being allocated to pay for damages to anyone stationed at Camp Lejeune during that time. Unfortunately, it appears that officials may have known the contaminated water problem existed and did little to protect their men. The Semper Fi code was not honored. If you or someone in your family has developed a serious illness, including various forms of cancer, call this Camp Lejeune legal support line right now. You can't turn back the clock and change what happened, but you can certainly call right now and learn your rights as a Marine. Here's the number.
800-477-1736. 800-477-1736. That's 800-477-1736. Paid for by Legal Alert Line.
Hi, this is Susan Powers from the Armstrong Advisory Group. With spring on the way and taxes due soon, now's the perfect time to review your overall financial plan, and our monthly guide may help. It's called 9 Tips to Spring Clean Your Finances, where we outline numerous issues that may affect you going forward, like evaluating any income changes for the upcoming year. It's important to understand how a difference in income might affect your long-term planning. Even if you're comfortable with your current plan, taking stock of potential adjustments may help further secure your assets in the future. Learn about this and other important strategies in our new guide called 9 Tips to Spring Clean Your Finances. Get your copy today by calling 800-393-4001. That's 800-393-4001, or request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange and Veterans Development Corporation are proud partners of the Disabled American Veterans Department of Massachusetts. The DAV provides thousands of hours of voluntary services at our DAV medical centers and is the only DAV department in the country to lead a veterans housing initiative for single veterans and for those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit davma.org. That's davma.org. Protecting your assets is the key to a sound estate plan. Cushing & Dolan's new guide is called Back to the Basics, a complete guide to an estate and asset protection plan. In it, you'll learn about important issues like avoiding probate and potentially eliminating your estate taxes. Call 866-848-5699 right now and request your free guide today, or request it online by visiting LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org, CancerSupportMass.org.
To be engaged, you must feel included and valued. The DAV Department of Massachusetts nurtures a culture where inclusiveness is a reflex, not an initiative, where there's a deep sense of pride, passion, and belonging that is unified in our shared commitment, dedication, and patriotism for our country. We know through experience that different ideas, perspectives, and backgrounds create a stronger and more creative organization that delivers better results for the veterans and families we strive to assist. For more information, visit davma.org.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. The DAV 5K Boston is presented by Veterans Development Corporation. This is the Financial Exchange with Chuck Zodda and Marc Fandetti.
A little bit after 11 o'clock, and markets are still snoozing for the day. The Dow Jones Industrial Average is up 5 points. Not 5%, but 5 points. S&P 500 is down 4 points. And the NASDAQ is up 16, so not much movement there. 10-year U.S. Treasury is up 2 basis points to 4.28%. Oil West Texas Intermediate up 54 cents a gallon to 77.03. The AAA national average for gas prices up 0.2 cents to 326 4/10 currently. And we've got gold down $10.70 an ounce to $2,038.70. Chuck, Marc Fandetti, and Tucker with you. And Mark, our top story this hour. Social Security beneficiaries may owe more taxes on their benefits for 2023, how Congress could change that. It's a piece from CNBC, and pretty much here's the crux of it. I'll quote. If your combined income as an individual tax filer is between $25,000 and $34,000, or between $32,000 and $44,000 if married and filing jointly, you may pay out taxes on up to 50% of your benefits. If your combined income is more than $34,000 and you file individually, or married filing jointly and more than $44,000 in combined income, up to 85% of your benefits may be taxed. And the reason why this matters for last year is there's an 8.7% Social Security cost of living adjustment for 2023. And that may have pushed some families into either of those thresholds, meaning that their Social Security income may have been partially taxed for the first time, or a larger portion of their Social Security may have been taxed than previously was. Your thoughts, Mark?
Well, it seems unfair. But rates are indexed for inflation. Income tax, the brackets, are indexed. So you're not being taxed on gains in your overall income, as I understand it, that are attributable to inflation. So while it seems unfair, and please, Chuck, correct me if I'm wrong, the brackets are indexed. So depending on your situation, i.e. if you fall into a situation where you are going to be faced with a higher percentage of your benefits taxed, it's because overall income went up in real terms because, again, the brackets are indexed. Is that incorrect?
Not just the brackets, but the standard deduction is also indexed for inflation. So let's look at this just as an example. Let's say that you're just an individual. Let's just make this easy. And let's say that you had your only income was $24,000. Now, again, this is where it will matter somewhat. If your income was $24,000 of Social Security and nothing else, first $25,000 is not going to be taxed. So your tax that year would be nothing, effectively, is what I gather.
Okay. Thank you. Sorry.
You go through this cost of living adjustment, and you say, okay, my income went from $24,000, which was, Social Security only and not taxed, and now it is 8.7% higher. So now it's $26,000 and change. So half of my benefit is going to be taxed then, which is around $13,000. So half of it would be, eligible for being taxed. But when we look at the standard deduction for 2023, the standard deduction for last year, I'm just pulling this up. I didn't have it handy. Here we go. It was, this is the wrong year. Thank you, Internet, for not giving me the right thing. Here we go, 2023. Standard deduction for single or married filing separately, $13,850, which means if your Social Security went from $24,000 and not taxable to $26,000 and 50% taxable, Mark, 50% of $26,000?
I believe that's 13, Chuck.
And the standard deduction is $13,850, which means all of that income is deducted. You still owe no taxes.
Did they make that point in the article? If so, I missed it.
I didn't see it.
Because that is the key point, isn't it?
That's the point that I will make here.
That's where you're going.
Yes, there are probably edge cases where you have other income in this and that, but those edge cases, you're probably already above these thresholds to begin with because this average Social Security benefit's like $1,300 a month, so you're already at $15,000 in income there. If you have just anything else coming in from elsewhere, you're getting kicked into these thresholds to begin with.
The tone suggests that people are being penalized due solely to inflation. They're being taxed more than they otherwise would solely due to inflation. But when you incorporate the indexation of the standard deduction, that's not the case in this very simple scenario that you've laid out.
Let's look at another one just because I'm curious, and I don't know the answer to this.
Okay.
So let's say that someone, once again, is an individual, and this time, let's say that they were making, I don't know, let's call it $33,000 in Social Security income previously, which would mean that it was half taxable to begin with. So that is $16,500. Standard deduction was, I don't know, what was it before 2023? It was up 8%. So let's call it $12,000. So let's say that they had $4,500 in income that was taxable in 2022, just as an example. So you got $33,000. It's times 1.8087. Now it goes up to almost 30. I don't know. It's almost $36,000. So this time it's going to be 85% taxable instead of just 50% taxable because you're over that $34,000 threshold. So now you go times 0.85. We end up with, let's see, about $30,000 then. Okay, so here's one where it does make a difference. Is if you're going from that 50% taxable, I don't want to call it I guess bracket of Social Security, up to 85% of it being taxable, then it is going to have a bump up in your taxable income because the standard deduction is not bumping up to offset all of that. Is there a small cost then? Yeah, there is. It's in that narrow area where you're bumping between those. And so the question is, how many filers does that actually matter for? It's a small overall number. When we talk about problems with the tax code, this is one that I'm not sure is near the top of my list.
But it's politically sensitive, to say the least, so it's getting action. There are at least a couple bills to remedy, if that's the right word. Not clear that this is a big problem. If you've been affected by it, it's a big problem. I would resent it too, but...
Let me ask you this, because one of the things that they mention in this is this idea of double taxation on Social Security benefits. And the double tax is the fact that, look, when you earn income to begin with, you have the payroll tax that comes out in order to fund Social Security, and then you receive Social Security and you get taxed on said Social Security income.
But you're not taxed on the contribution, right? On your portion of the payroll tax? That's pre-tax, isn't it?
Yes.
Okay.
So...
Is that double taxation then?
Well,
double taxation is you pay taxes on, for example, a 401k loan. Right? 401k loan is the classic example.
Yes.
You pay taxes.
Yes.
The interest, not the principal, but the interest that you use to pay back that loan is post-tax. When you take it out later, it's taxed again. That is true double taxation. The same dollar, if you could track it, gets taxed twice. But it's not clear to me that Social Security, that this scenario also represents double taxation, unless I'm missing some key element.
No, and look, this is also looking at this from the perspective of the dollars that you put in are your dollars, where we know they're not. a retiree receiving Social Security today is getting
you don't have
my
an account.
tax dollars.
You don't have an account.
It's not your account or anything, so it doesn't work from that perspective either. So there are proposals out there to say, hey, when you get Social Security, you should not be taxed on it. I don't really have a strong feeling on it either way. If you want to go that route, ultimately, tax dollars are fungible. Whether you fund it with a payroll tax or whether you fund it with a tax on, the number of rockets produced each year by Raytheon, tax dollars are fungible. They move around. We like to pretend that they don't, but it's not something where I know we always like to be like, oh, the revenue from this should go to this, but that's not how it actually works in practice at most levels of government.
I guess there's an equity argument. Is it fair to tax them? This is something that voters will have to weigh in on. Like you,
Sure.
I don't really have
Right.
an opinion. For some taxpayers, it might be fair. They have other sources of income, and they'd be considered wealthy. Not that I'm judging. I don't want to get into that game because you've worked hard, saved a lot, and have assets. Why should your Social Security be penalized? There are others who would say, well, we use equity guidelines to construct the entire tax code. We have a graded income tax, and there are plenty of other examples. What we all know is that Social Security benefits are up like 200% in real terms. I actually just did the math since 2020 because I didn't know and I was shocked. Up 100%, 2 times 100%.
Say this again?
Social Security benefits paid out are up 100%. They've doubled in the past 23 years since 2020, which is when I started.
2000.
Since 2000.
I was going to say in the last 3 years.
Yes,
that's a big.
Did you?
I'm like, did everyone retire in the last 3 years?
Oh, you haven't seen that?
Okay, that makes more sense.
Thank
to me.
you. I said since 2020. That is to say 23 years.
Since 2000.
In my excitement. Since 2000, I did it again. Sorry, I must have a fever. I don't know, or I'm just an idiot. So yeah, they've doubled in real terms in the last 23 years since 2000. Population under 65 is only up like 15%. So this is the
problem.
This is the age-old problem with any type of benefit system that's effectively pay-go, coupled with a population slowdown, growth slowdown, coupled with increasing life expectancy. It's become sort of a perfect storm. The tragic thing is this was foreseeable. There were plenty of proposals to reform Social Security in the 90s and 2000s. Arguably, kind of like with climate change, whatever you think of its origins, it might be too late actuarially. Probably not. I mean, they'd have to be more severe changes than were being proposed 20 or so years ago. But we did see this coming, and it's unfolding exactly as some of the apocalyptic predictions suggested.
We can't all be Ida Mae Fuller, the first recipient of Social Security who paid in $24.75 for one paycheck and then collected $22,888.92. And that actually is a great example of why this whole double taxation doesn't make sense. If she were only collecting based on what she paid in, well, she couldn't collect $22,000. Would you just not tax that for her? Doesn't quite make sense.
Yeah, thankfully, in an actuarial sense, there were plenty of people who died. Only in an actuarial sense, this is a good thing, obviously, prematurely. Is in that first and second cohort.
That's awfully dark, Mark.
Well, I said in an actuarial
I
sense.
know.
That's why we still got the program. If everybody's life expectancy had ballooned.
It's got to be tough being an actuary.
Very morbid, yeah.
Yeah. Let's take a quick break. When we come back, we're going to be joined by Corey Adams from Robert Half talking about employers and their biggest hiring mistakes.
Text us 617-362-1385 with your comments and questions about today's show, and let us know what you think about the stories we're covering. This is the Financial Exchange Radio Network.
How does your DAV membership benefit you? As a DAV member, in addition to DAV programs and services, members are entitled to a member benefits package, which gives you access to a variety of important programs, products, and services. Also included with your membership is a free subscription to DAV Magazine. For more information, visit davma.org. That's davma.org.
Protecting your assets is the key to a sound estate plan. Cushing & Dolan's new guide is called Back to the Basics, a complete guide to an estate and asset protection plan. In it, you'll learn about important issues like avoiding probate and potentially eliminating your estate taxes. Call 866-848-5699 right now and request your free guide today. Or request it online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Planning for your financial future never stops, and with spring on the way, right now is the perfect time to take stock of your overall strategy. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and our new guide may help. It's called 9 Tips to Spring Clean Your Finances. If you're planning a significant purchase either this year or down the road, we've got important information to share that will help you understand the effect it may have on your finances. You may be retired or getting close to retirement, and if so, this guide is for you. Take the necessary time now to review your financial strategy and learn about what adjustments you can make that might benefit your planning. The guide is free and it's yours today by calling 800-393-4001. That number again is 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about the basics of estate planning. Todd, Massachusetts recently raised their estate tax exemption to $2 million. Do people still have to plan?
Yes, it's a simple answer is yes, but let's think about it from a back to the basics standpoint, right? Some people think they don't even need a will, or if they have a will, that's all they need. First, I want you to know that a will is a won't. It won't avoid probate. It won't help you reduce estate taxes, which we're talking about. It won't help you protect assets from the nursing home, so it won't do a lot. So a will is really a won't, so please don't stop with a will. The reason you need to do a trust is this new exemption that you speak of went from $1 million to $2 million. So now with a trust, you are able to double that exemption by being a married couple and having a trust in place. You can shelter $2 million on the first death and $2 million on the second death to shelter $4 million. But you need a trust to do it. And while the exemption went up, which is good news, the cost of not planning just doubled. So very important to get your trusts in place.
Learn how you can avoid probate, eliminate estate taxes, keep your money in your family, and protect your assets from the nursing home. Request this brand new guide from Cushing & Dolan. It's called Back to the Basics. Call 866-848-5699 or visit LegalExchangeShow.com to request it. Cushing & Dolan have been helping families like yours for more than 30 years. Once again, the phone number 866-848-5699 or request it from their website LegalExchangeShow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Missed one of our shows? Catch up anytime by asking your Alexa smart speaker to play the Financial Exchange. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. Visit the U.S. Virgin Islands and enjoy your next incredible vacation. Explore St. Croix, St. Thomas, or St. John, and enjoy pristine beaches, world-class dining, and fall naturally in rhythm with the heartbeat of the islands. There's no passport required or money to exchange. Go to visitusvi.com and book your trip today. That's visitusvi.com.
As promised, we're now joined by Corey Adams from Robert Half talking about the top hiring mistakes of employers. Corey, how are you today?
I'm good, Chuck. How you doing?
Doing well. What are the biggest hiring mistakes that employers tend to make, and why do they make them?
Sure. So there's 3, and they're kind of long, so I'll try to keep them brief. So the first is not staffing adequately, causing further delays on projects which are absolutely vital for growth. So pulling back on personnel budgets makes it more difficult to bring in skilled talent. And if you don't have professionals on your team already, projects suffer, which leads not only to delayed completion of business goals, but as we know, can also lead to burnout of your employees. The second mistake we see is not taking into consideration which projects need permanent versus contract resources. Some companies delay hiring if they're apprehensive about adding permanent headcount. Makes sense. Happens all the time, but for short or medium term projects that would benefit from extra hands, but not necessarily permanent or full-time, these companies should really take a good look at interim contract talent. And then the third one, and this has been pretty consistent for a while, is delaying hiring decisions. And by doing so, they're losing top candidates to employers who just move faster. So employers, for some reason, continue to be cautious about recruiting amid the uncertain economic time that we continue to be in right now a little bit. So leaving critical roles open carries some significant business risk. And so taking too long to make a hiring decision can mean missing out on your top candidate to a competitor who in fact may move more quickly. And then the last piece of this, the other side of it, is making a bad hire can also be costly for employers. Almost 1 in 4 employers admit to making a bad hire, and on average, it takes 11 weeks to terminate a new hire and another 8 weeks to restaff the position, amounting in 5 months of lost work and production.
When we look at mobility in the labor force right now, what are you seeing in terms of workers and their likelihood of looking for a job at the moment?
So 36% of workers plan to look for a new job in the next 6 months. It's important to note that this is actually down from 49% when we asked this question in July. Listen, workers are thinking strategically right now about their career. We just had the Great Resignation, which was followed by the Big Stay, and many workers right now feel less inclined to search for a new job because what we found from our research, 3 primary drivers or 3 reasons. The first one is that their current job offers a level of flexibility that they're not willing to let go of or to part with. The second driver is that they feel fulfilled in their current role, which is important. And then finally, they feel well compensated for the work that they do. The only other thing I'll mention here, and it might not tie in perfectly, and I imagine we're going to probably come back to this in a couple of weeks potentially, but we're also seeing a significant increase in the boomerang hire. And so we saw it a few years ago, and it's starting to feel like it's coming back again. And I don't necessarily think it's tied to just some of the layoffs. I just think that there's been sort of an acceptance around the practice of rehiring somebody. And it doesn't mean they came back in an elevated role. Sometimes it's at the same level, but it seems to be happening more and more lately. And so you might see that again moving forward.
So what does this mean for employers who are looking to hire for their teams today?
So I think what it means is that talent is still scarce in many industries and for many occupations. And in fact, many positions continue to be below the national unemployment rate. So I think we're still finding that some employers are missing out on some top talent. And in fact, last year, we saw almost every hiring manager miss out on at least one of their top candidates because a candidate took another job with another organization. And the 3 reasons that we found from our research and why this was happening is that the candidates' pay expectations were either too high, the company didn't offer enough flexibility, which we know is really important, and then the third reason was that companies took too long to actually make the offer that they should have made.
Very good. Corey, we appreciate you joining us today. Thank you so much for the time, and I hope you have a great rest of the day and rest of the week.
You too, Chuck. Have a good week.
That is Corey Adams from Robert Half talking about employers with their top hiring mistakes. Taking a look around markets as we head towards the bottom of the hour, we've got the Dow still just drifting aimlessly. It's up 3 points. The S&P 500 is down 6. The NASDAQ is up 3 points as well. So not much going on today in equity markets. Bond market, quiet as well, but at least a little bit of movement there. 10-year Treasury still up 2 basis points to 4.28. And we've got oil, West Texas Intermediate, now up 72 cents a barrel to 77.21 cents, almost a 1% gain happening on oil today. So fairly quiet overall, but a lot of economic data coming out the next 3-4 days, and I do anticipate the peak of this in terms of focus is going to be on Thursday when we get that PC.
We are the Debt Destroyer Network. Any debt you have, credit card, tax, student loan debt, call now for free information that helps you destroy your debt. It's great advice. Plus, when you make this free call now, we have Debt Destroyer experts ready to help. They can show you how to destroy your debt and get your life back on track. Debt problems don't have to be overwhelming. You can live stress-free and debt-free. Credit cards, medical bills, IRS tax problems, even student loan debt. Learn about free programs offered by the credit card companies, hospitals, and even the government that can help slash your debt. Call the Debt Destroyer now for free information. Call now. 800-430-8804. 800-430-8804. 800-430-8804. Again, that's 800-430-8804.
The Financial Exchange and Veterans Development Corporation are proud partners of the Disabled American Veterans Department of Massachusetts. The DAV provides thousands of hours of voluntary services at our DAV medical centers and is the only DAV department in the country to lead a veterans housing initiative for single veterans and for those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit davma.org. That's davma.org. Protecting your assets is the key to a sound estate plan. Cushing & Dolan's new guide is called Back to the Basics, a complete guide to an estate and asset protection plan. In it, you'll learn about important issues like avoiding probate and potentially eliminating your estate taxes. Call 866-848-5699 right now and request your free guide today. Or request it online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Susan Powers from the Armstrong Advisory Group. With spring on the way and taxes due soon, now's the perfect time to review your overall financial plan, and our monthly guide may help. It's called 9 Tips to Spring Clean Your Finances, where we outline numerous issues that may affect you going forward, like evaluating any income changes for the upcoming year. It's important to understand how a difference in income might affect your long-term planning. Even if you're comfortable with your current plan, taking stock of potential adjustments may help further secure your assets in the future. Learn about this and other important strategies in our new guide called 9 Tips to Spring Clean Your Finances. Get your copy today by calling 800-393-4001. That's 800-393-4001, or request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about the basics of estate planning. Todd, Massachusetts recently raised their estate tax exemption to $2 million. Do people still have to plan?
Yes, it's a simple answer is yes, but let's think about it from a back to the basics standpoint, right? Some people think they don't even need a will, or if they have a will, that's all they need. First, I want you to know that a will is a won't. It won't avoid probate. It won't help you reduce estate taxes, which we're talking about. It won't help you protect assets from the nursing home, so it won't do a lot. So a will is really a won't, so please don't stop with a will. The reason you need to do a trust is this new exemption that you speak of went from $1 million to $2 million. So now with a trust, you are able to double that exemption by being a married couple and having a trust in place. You can shelter $2 million on the first death and $2 million on the second death to shelter $4 million. But you need a trust to do it. And while the exemption went up, which is good news, the cost of not planning just doubled. So very important to get your trusts in place.
Learn how you can avoid probate, eliminate estate taxes, keep your money in your family, and protect your assets from the nursing home. Request this brand new guide from Cushing & Dolan. It's called Back to the Basics. Call 866-848-5699 or visit LegalExchangeShow.com to request it. Cushing & Dolan have been helping families like yours for more than 30 years. Once again, the phone number 866-848-5699 or request it from their website, LegalExchangeShow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Tune in for Trivia, brought to you by Applebee's. Every day at 11:20 for your chance to win cool prizes. Text us at 617-362-1385 and use keyword Applebee's. Complete rules are available at financialexchangeshow.com. This is the Financial Exchange Radio Network.
Yeah, we get trivia bump back a segment here, but hey, still brought to you by Applebee's. Choose from a variety of half-price late-night appetizers after 9 p.m., including half-price boneless buffalo wings, half-price spinach and artichoke dip, and half-price warm pretzels dipped in pure cheese. Gather with friends any day of the week at Applebee's and say hello to half-price appetizers served late night, because half off is just more fun. Now, that's eating good in the neighborhood. Void where prohibited. Dine in only. Well, on this date in 1932, future music superstar Johnny Cash was born. In Cash's legendary career, he won 9 country music awards and over a dozen Grammy Awards, including Lifetime Achievement. An Academy Award-winning film called Walk the Line, based on his 2 autobiographies, was released back in 2005. Trivia question today: which actor portrayed Johnny Cash in the 2005 movie Walk the Line? Once again, which actor portrayed Johnny Cash in the 2005 movie Walk the Line? Be the 9th person today to text us at 617-362-1385 with the correct answer. And you win a Financial Exchange Show t-shirt and be registered to win a $100 gift card to Applebee's. Be sure to include the keyword Applebee's in your text, and we'll give away that Applebee's gift card on Friday's show. 617-362-1385, and the 9th correct response will be our winner. See complete contest rules at financialexchangeshow.com.
Tucker, you have a favorite Johnny Cash song?
I'm not like a huge Johnny Cash guy, but I mean, Ring of Fire, you can't go wrong.
Mm-hmm.
I know that's kind of like a basic answer, but what about you?
Mark, what about you?
I would struggle to name any Johnny Cash song, to tell you the truth, Chuck. Sorry. Nothing against him.
So, I would actually say...
Stop. I'm going to stop you. His cover of 9 Inch Nails.
So
Yes,
I was going to say the best Johnny Cash song
yes.
is not actually a Johnny Cash song, but it
Unbelievable
is his
song.
cover of Hurt by 9 Inch Nails. And one of the few instances also where the cover tops the original in a way that's just fantastic.
Just a goosebumps song,
Oh,
honestly.
just absolutely fantastic. Totally agree. That's exactly where I was going.
Yes.
Mark, let's talk a little bit about home prices worldwide, which is something that I know nothing about because I don't really follow the housing market outside of the U.S. because it's, if we're being 100% honest, residential real estate markets don't matter as much in the rest of the world simply because they're not set up the same way that the United States is set up from that perspective as far as, you know, kind of this borrowing and upgrade cycle and credit creation. It's not the same thing when you look at how other countries work. A lot of other countries, when you take out a mortgage, it's an interest-only loan, and it's basically the rent that you pay for living there for, you know, however many years that it is. So real estate markets don't matter the same way that they do in the U.S. in much of the rest of the world. But according to a Financial Times analysis of OECD data, nominal house prices grew 2.1% in the third quarter of 2023 compared to the previous 3 months, up from stagnation at the start of last year. So you're seeing globally some signs that the global housing market is turning up. But again, home prices don't matter the same way that they do in many markets, don't matter the same way that they do in the U.S. in most of the rest of the world.
Yeah, they're a big part of investment, which is a big part in turn of GDP here in the United States. I don't know if that's true to your point elsewhere. I'm sorry, and I'm scrambling for some data here. I didn't look into it intensively before the show, obviously, and it's not available in the usual sources. So data might be an issue. We've only gotten good, reliable, high frequency, and all those other desirable properties data on housing here in the last, say, 25 years, where it's at every user's fingertips. So I guess I wouldn't expect to see it elsewhere. And I don't know if it's, in turn, as big a driver of demand, all the knock-on effects that propel consumption and thus gross domestic product, GDP here. I don't know if they're in place overseas as well. Presumably, it's important. The tone and the content of this article in the Financial Times suggests that it is. I just wouldn't know how to quantify it. Here we know a slowdown in housing translates into a high probability of economic slowdown, if not outright recession.
Next one that I want to cover here is a piece from the Wall Street Journal that touches on something we covered originally maybe 2-3 weeks ago, where it was a story originally about Capital One and the fact that they advertised, these interest rates that you can get on their savings accounts, but several years ago they changed the types of savings accounts that can actually get those rates. They introduced like a new one with a new name, and if you had the old one, you didn't get the interest rates that were advertised. It was not something where you kept up the same way you would expect to. Turns out that this is not just something that is unique to Capital One Financial, but in this piece from the Wall Street Journal, other banks such as UFB Direct and CIT Bank advertise these high rates online, but they might change account types and account names. And so if you had an account prior to a certain date, it might not be the type of account that earns the rate that's advertised online, which puts an awful lot of onus on the individual to say, hey, am I getting this? As opposed to, gee, this is a bank that offers savings accounts, and the savings accounts get these rates.
I'm already confused, which I think is your point. It gets complicated.
It gets really messy, and it's just something that also, to me, it's slimy. It's very, very slimy because ultimately it's a bank that is trying to make more profit and higher margins, not on the basis of offering a better product that's more efficient for them to offer, or having, a way to run their business better, but they're making higher margins by deceiving their own customers into thinking they have a higher rate when in fact they don't.
Yeah, I wonder if that's, I don't know, false. I was going to say fraud, but that's a very strong word. Is it false advertising?
I
not
don't,
technically?
I don't think it is.
Not
and
technically.
This is the thing. Like, I don't think it's false
don't
advertising.
Tell me. Good.
But as someone who has a Capital One account, it took me, I think we looked it up on the show, it took me like 2 years after to realize, oh, gee, when the Fed started raising rates, like, I'm not participating in these higher rates. What gives? Oh, I have to apply for a new type of account. And look, I'm not a genius, but I tend to keep fairly close track of, what's going on with my money. I'll go so far as to say if it took me a little bit of time to figure out what was going on, there are a lot of people who pay way less attention to their money than I do and might still not know that this is something that's going on. They might have Capital One accounts and think that this is, they're getting, 4 and a quarter, whatever percent interest.
I can't wait, first of all, to see evidence of AI make artificial intelligence and its integration into the things we do every day, make its way into everyday life. I really can't wait for that. I hope all this hype pays off. Yet to see evidence of it. I'm sure it's working behind the scenes. Then I hear a story like this, and where would AI come in? Well, they could have software that monitored account activity and type and prompted customer service to offer that to you as a good and valued customer. So is that a business a sort of devious and somewhat underhanded business practice, or is it just a failure of adequate technology?
No, I'll quote here. After the Federal Reserve cut rates at the start of the pandemic, CIT dropped the rate on this person's savings builder account to below 1%. Was originally paying nearly 2%, well above what his Capital One account was paying. Once the central bank started hiking, CIT, now owned by Raleigh, North Carolina First Citizens Bank shares, saved its biggest rate increases for customers with a newer product called Savings Connect. So they basically introduced a new account type so that they wouldn't have to raise rates on the old ones and could make fatter margins.
Oh, yeah, that is slimy.
It's not fraud.
No.
It's not false advertising. It's just slimy. It's just not nice is the best way that I can put it. I know there's no law against being mean as a business. I'm not saying there should be either, but it's gross.
Yeah, you do run into experiences like that a lot. I had one with a utility company that started offering a rebate if you allowed them to debit their monthly fee from your bank account. And they offered this prominently to new customers. I guess it was in the literature, but didn't tell me about it for like a year. Or I stumbled on something that noted it, and I felt a little slighted, I guess.
Like, imagine if you bought, floor seats to the Celtics. And you said, oh, gee, I got floor seats to the Celtics. And then you show up, and everyone knows what the term floor seats means. It means you're on the floor. Not like first row back. It means you're on the floor. And imagine if you show up and it's like, hey, you're in the second row because we've got ultra floor seats now. That's what this is like. It's not that there was false advertising. It's just they came out with something newer that was better without telling you, and you paid the old product's price.
It just violates your sense of fairness and propriety. And yeah, it does. It stinks.
Folks, if you've got questions about your finances, not specifically related to this, but in general, Armstrong Advisory Group provides financial guidance to folks regarding their retirement, regarding, any kind of financial goal that you can come up with. If you're interested in a consultation with someone from the Armstrong Advisory Group, there are a couple different ways that you can get in touch with us. The first, you can go to armstrongadvisory.com, click the Get Started button, and then you can schedule a time to meet with a member of our team. Second way, you can call 800-393-4001. That phone number again is 800-393-4001, or you can go to armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Another piece in the New York Times that kind of dovetails with this, but not in a slimy, skeezy way, in my opinion. It's titled, Looking for a Lower Credit Card Interest Rate, Good Luck. And it's talking about the fact that interest rates on credit cards are high right now. If you've got scores of 620 to 710, typical interest rate charged by big banks is around 28%. And look, that's kind of, they're all in a pretty tight range. Quite honestly, I don't really have a problem with this because ultimately this is an unsecured loan that's not backed by anything.
Quite risky.
It's, especially if you're talking those kinds of credit scores, those are borrowers with a history of missing payments or defaults. And what do you think the interest rate should be?
Why, is there a consumer group taking issue with this? I didn't.
Well, I mean, look, people
or is
are all,
that just inevitable?
You
that
hear people saying,
somebody's gonna
I can't earn anything in interest, but, why is my credit card interest rate so high? And the reason is because there's a significant risk that you might default if you have credit, a credit score of 625.
Yeah, they can't do detailed underwriting on you. You're in a group.
No, and it doesn't make sense for them to in terms of the dollars at stake. If you've got a $1,000 credit line outstanding, the bank is earning, $200 in interest a year. They can't have someone sit down and do a detailed analysis.
And also, you get that
account.
credit instantly.
Yes.
Daily basis. It's at your fingertips. The price you pay for that is a risk premium, if you like.
So I think that at this point, the unfortunate thing is I don't think you're going to be seeing much movement on this. And quite honestly, I don't think that you should be.
It should be like one tier below Loan Shark rates. Loan Shark doesn't do a lot. I assume.
Sure.
I don't know. I'm not in the business, but I assume they don't do a lot of underwriting. I probably have had relatives at some point who were, but I'm not. That's not an ethnic state. It's just a fact.
Just a thing.
Just a fact. So I probably have. I probably have it in my blood. I could jump right into it, do some underwriting if I had to. You have to size somebody up quickly. A credit card kind of does the same thing, and that's why their rates are kind of Loan Sharkish, and that's why they're vicious when they come after you.
Who would you give a lower rate, Tucker or me?
Just based on appearance?
Yeah.
Sorry, Tuck.
I win.
You look like a responsible. Tucker looks like an entertainment guy.
What do you mean he looks like an entertainment guy?
But he could be. He looks like a media guy. And
You're saying I look like a jester?
I don't know.
Something?
He's
looks
wearing
like
glasses. That seems trustworthy. Maybe he doubles.
He looks like someone who might try to stick it to the man on a bad day.
Oh, yeah,
there's
no doubt about it.
He looks a little rebellious.
Yep.
I'm envious of his look, as we discussed, the head of hair and so forth.
You nailed
But he
me.
looks
Yep.
like he could be a little bit rebellious.
What do I look like?
You look like a responsible citizen.
Oh, wow.
I'm not saying he does. That's unfair. I'm sorry, Tuck, but you know what I mean.
So you're saying I'm a jerk is what you're trying to tell me.
Hey, screw you,
Okay.
pal. I'm no jerk. Screw
Well, you know what, Mark? The jerk store called, and they're all out of you.
You asked me. Maybe I would make a good underwriter.
Let's take a quick break here. When we come back, we got Stack Roulette.
Miss any of the show? The Financial Exchange Show podcast is available on Apple, Spotify, and iHeartRadio. Hit the subscribe button and leave us a 5-star review. This is the Financial Exchange Radio Network. Estate and asset protection are the keys to a successful retirement. Cushing & Dolan are experts in elder law. And if you're ready to start your planning or need a refresher done on your existing plan, you need to get their new guide called Back to the Basics, a complete guide to an estate and asset protection plan. In it, you'll learn strategies to help you protect your assets from probate, as well as the nursing home. We'll also show you how to properly create your will and set up your beneficiaries in a way that will ensure your family's security for the long term. Call Cushing & Dolan right now at 866-848-5699 and get your free guide today. Proper estate planning is not easy. There are many necessary elements that you'll need to include to give you the peace of mind you want as you prepare for your later years. That number again is 866-848-5699. 866-848-5699. Or you can request the guide online at legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. Your next incredible vacation is just a click away. The United States Virgin Islands is the perfect place to enjoy sun, sand, great food, unbelievable beaches, a wide variety of water sports, and the relaxation you deserve. So go to usvi.com. Learn all about St. Croix, St. Thomas, and St. John. Each island is special in its own unique way, and all have plenty to offer as you decide where to travel this winter. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Whether it's a romantic getaway or a family vacation, the U.S. Virgin Islands has everything you need to enjoy the vacation of a lifetime. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we have a guide available this month titled 9 Tips to Spring Clean Your Finances. Mike, one of the things people need to look at starting out a year is whether or not they expect a major shift in their income, either higher or lower.
Yeah, I mean, a lot has changed in terms of how we work and just family dynamics over the last few years coming out of the pandemic. And you've seen a lot of people jump back into the labor force that might have gotten out, or the opposite of that. And certainly it comes and impacts everything from 401k contributions to how much you're going to be able to save and put out for the next year. And so just understanding where the income side of that budget is going to land for 2024 and doing that evaluation is an important step of the process.
The other piece to pay attention to is the expense side of things, in particular if you have one-time expenses that are going to be coming up, if you need work done on the house, if you've got car expenses or anything else, making sure you plan for that as well.
Well, how are you going to finance it? Do I have an emergency fund? Am I going to borrow money for a home improvement that I'm doing? Maybe I'm already retired and I'm on a fixed monthly budget from Social Security and maybe a pension, and I've got some big expense coming up. You might need to realign your portfolio for that coming expense. And so really just, again, comes mainly down to budgeting here, but thinking about where those income and expense numbers are going to land for the full year.
Our guide is titled 9 Tips to Spring Clean Your Finances, and you can request it 2 different ways. The first is by visiting ArmstrongAdvisory.com. The second is by calling 800-393-4001. That number again is 800-393-4001, or you can visit ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Miss any of the show? Catch up at your convenience by visiting financialexchangeshow.com and clicking the on-demand icon, where you'll find all of our interviews and full shows. This is your home for the latest business and financial news in New England and around the country. This is the Financial Exchange Radio Network.
Trivia question today was, which actor portrayed Johnny Cash in the 2005 movie Walk the Line? That'll be Joaquin Phoenix. He won multiple awards for his performance as Cash in Walk the Line, including the Golden Globe for Best Actor in a Musical or Comedy. Joe from Westport, Mass, taking home the Financial Exchange Show t-shirt. And Joe's also registered to win a $100 gift card to Applebee's, which we'll give away on Friday's show. And trivia is brought to you by Applebee's. Choose from a variety of half-price late-night appetizers after 9 p.m. because half off is just more fun. Now, that's eating good in the neighborhood, void where prohibited, dine-in only.
Mark, what do you have for me for Stack Roulette?
Have you guys heard about Peter Thiel, the famous venture capitalist, offering fellows, students he picks, $100K to drop out of college?
Yeah.
Start their own company. Wall Street Journal writes about the program today. He was thinking about shutting it down. Instead, he's going to expand it, offering it to more people, I guess, while on its face, it's hard to say this is a bad thing. Presumably, he culls these students very carefully. They have some type of idea that he thinks they're likely to be able to monetize to some schmuck like me on campus who wouldn't know what the heck to do with it, or was just going to put it probably in ARC ETF or something. No, you have to have an idea that's likely to be monetizable. It's my word. I don't know what the actual criteria are. But, for the vast majority, this is all well and good. But for the vast, you can't underscore that enough, majority of people, college pays off. I mean, on average, an extra $1 million or so in lifetime earnings, the enrichment, the social connections, right on down the line. So this is a nice little sort of sideshow, but I don't think is a serious candidate for replacing higher ed in this country. All the concerns about wokeness permeating higher ed and like distractions aside, college is still the way to go unless you've got some exceptionally good idea.
Well, I think the two things that I'll say just as caveats, it does depend on what you study and the price at which you're paying, because ultimately, and the third part is also where. If you are paying $80,000 a year for a degree in something that doesn't have much practical application at a very lower tier private school, that may not be a great bang for your buck compared to, hey, can I get the same quality of education at a quarter of the cost at a state school, or even do my first couple of years at community college and then transfer to a state school? I think those are the things that have to be considered as well, because the people that I do see that tend to be, when you look at the numbers and how they tend to shake out, the price that you pay ultimately in terms of, let me just start from the beginning. I was getting way too complex here. If you're going to pay a high price for college, it needs to be somewhere with a great network, because that's what you're paying for.
Yeah, we could do a better job. I certainly could have of due diligencing that. Opportunities upon graduation. Yeah,
people have not shopped for price on colleges enough in the last 30 years, in my opinion. And if you simply did some price shopping, I think you'd end up with better outcomes.
Price relative to
yes.
Earnings.
Yes.
Yeah, to the extent that you can get that data.
Yeah.
Yeah.
Taking a quick break here for the next 23 hours, but we'll be back tomorrow, so make sure you tune in, and we'll see you tomorrow on the Financial Exchange.